This line is AT&T, still underwater. It fell 57% from its peak to $14 in 2023 and never recovered. One decision did that. Most Americans already had a smartphone. The pay TV bundle was fraying. AT&T sat at its all-time high, $32.69, a mature utility paying a fat dividend, needing a new growth story. To fix growth, AT&T bought Time Warner, HBO, Warner Brothers, Turner. In 2018, it recast the books, restating them as if the deal had always been inside. Net debt, what the company would owe after using all its cash, topped $131 billion. The first full quarter after the deal closed brought the first break. AT&T fell 11.5% in a single week to $21.97, a third below its peak. AT&T posted strong numbers that week. CEO Randall Stephenson said, "I'm pleased with the progress we made on a number of fronts in the third quarter." The market wasn't. Debt and integration risk overwhelmed the headlines. The world locked down in March 2020. AT&T fell 17.5% in 1 week to $21.49. This was the COVID crash. And the quarter closed down 28.8%. Why so hard? Leverage. A company with net debt above $100 billion and a big dividend had little room to absorb a quarter with no revenue. The debt load mattered more than any single quarter's earnings. As investors priced in a simpler telecom, AT&T jumped 8.3% in a week to $20.99. The conglomerate era was ending. 3 weeks later, it fell 10.5% to $18.40. The primary filings show no single catalyst, just a telecom sell-off ahead of earnings. 4 days later, the second quarter filing showed the bet was unwound. Warner Media was gone from continuing operations. What was left? Net debt of $131.9 billion. The stock jumped 14.1% this week to $17.10. 4 days later, the filing showed 708,000 postpaid phone ads, 338,000 fiber ads, and wireless service revenue up 5.6%, best growth in a decade. Adjusted earnings slipped to 60 cents from 63, an earnings disappointment. The stock slid 8.6% to $18.22. On July 26th, the CEO insisted, "The direction we set 3 years ago is sound, and we're on the right trajectory." 4 days later, the market would hit the bottom. 4 days after that promise, the stock hit $14, the decade low, 57.2% below the 2016 peak. It never got close to the old high again. The market bought the fiber story in late January, and the stock jumped 11.1% to $26.21. Days later, the filing confirmed $12 billion returned to shareholders in 2025. The recovery is fragile. Net debt climbed back to $126.4 billion by mid-2026, and AT&T borrowed again. When the window closes, the stock is still 27.5% underwater at $23.71.